Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're going to recap this week in cannabis from January 11th to the 17th. Now, before we jump in, all I ask is that if you enjoyed this video or you learned something, please just leave a like or a thumbs up, as it really helps out my channel, and I would appreciate it. And then, of course, subscribe so that you don't miss any new videos. And then, if you want to actually get caught up and learn a little bit about what's been happening in the last 4 months, I seriously recommend going back to watch Reality Check Cannabis in 2020, and then you can get caught up to speed with episodes of This Week in Cannabis leading up from there. And that really would get you caught up to speed. But we're going to jump in because, folks, I mean, hey, if you've been in here this last week, it would have made you a good chunk of money, as it did me. And I just can't believe that for the first time ever, the momentum feels like it's literally behind us and pushing us towards this goal of ending prohibition, as opposed to being against us, as it has always, especially with Mitch McConnell in the helm. So just to go off of that, the sentiment is changing. Literally on Wednesday, the midweek update, New York Governor Cuomo again announced that he would legalize it for the third year in a row, but he's saying that he will do it now, and they need it now, so they can't wait any longer. Following that, we have the Virginia governor unveils bill to legalize cannabis as lawmakers schedule the first hearing. So again, this is very early, but again, for the fact that they're just saying this and getting it out there is huge, and all signs indicate that legislators plan to move quickly to advance this. Because, again, yes, I mean, no reason to wait any longer, and I'll get to a point, the perfect example, but another state. Indiana senator files bill to legalize and regulate cannabis in the state. Her reasoning, which, yes, why doesn't everyone think this way? It's a stupid waste of time that we do this. We give young people criminal records for something that is legal in what? A third of the nation? Fact. So good on you, Karen Tallien. And, you know, again, this is why you do want to pay attention when election season rolls around. So you're voting in people that have a head on their shoulders and aren't just going to keep the status quo the way it is, right? So this article, though, and as I covered, you know, U.S. and Canadian cannabis stocks have been flying this week with American legalization hopes rising. And again, if you've been following with the Georgia Senate runoff election results, the Democratic Party in control of the Senate, this has caused U.S. multi-state operators and Canadian licensed producers to see significant gains in their share prices. Now, it's important to distinguish between Canadian LPs, licensed producers, and U.S. multi-state operators, and I will break down a little bit of that further in this episode, but just to give you an example of like MSOs, the Advisor Shares Pure U.S. Cannabis ETF, which closely tracks publicly traded U.S. cannabis stocks, has more than doubled its assets under management to $579 million so far this year, which means that as of January 1st, it would have been trading at $275 million assets under management. But then, since like literally 17 days since then, more than $250 million has been injected in because people want to invest in cannabis for this opportunity. And Todd Harrison, he's someone that I've covered and featured his tweets. He's the same guy. He's a chief investment officer at a cannabis-focused investment firm, CB1 Capital. But he says it right, and it's just the slow motion perfect storm of this whole year. Couldn't have predicted this, but the pandemic, the Georgia Senate runoff votes, plus just the George Floyd murder and you know the need for social justice sooner than later, and just that being amplified, it's unbelievable how it's come together. But what this sentiment change does is it allows capital raises to take place. So these companies that are actually in good shape, and they're like, hey, you know, yeah, this is going to happen. We're going to crush it. We need some cash. And investors are like, we want to give you that cash so you can grow it. They want to buy other assets that are going to be gone soon, gone by other companies that might buy them or that might go bankrupt. So the market is being able to raise money again. That's a great sign that investors have confidence in these companies. And you have every reason to, especially U.S. multi-state operators, but this is why I wanted to show the difference. I would be very careful of Canadian LPs here in terms of another bubble that might be forming. Now, I just think he's not specifying the companies, and it just depends on which Canadian company you're talking about. As far as some fundamental businesses go, some are still distressed. We'll get to that later. But what he says is, but added that he doesn't see the U.S. cannabis industry in a bubble right now. No, not at all. There's still a lot of upside because they're cannabis companies, they've just been ignored for so long, but they've been executing, they've been crushing it. So that is why we have a lot of upside to look forward to. So just to jump over, we're going to cover Aphria, which is the number one LP in Canada. They're the top LP. So once we go through this, you'll understand, okay, well, what do you want to look for? What do you want to see in a good Canadian company? And this is a company that is not distressed, but we will get into a little bit further, Hexo and Canopy, and see why they are so reliant on the U.S. right now. because their Canadian play didn't work out as well as, say, Aphria or Village Farms International. But nonetheless, they report record revenue of 160 million, an increase of 33% from last year. And, EBITDA profitability of 12.6, seventh consecutive quarter. That's good for investors with big money to look for these metrics. But the biggest thing for me was getting their cash cost per gram down to 79 cents. So if we look, and this is again from Q2 2019 to 2020, they did increase total revenue 120 up to 160. Now their gross profit did not increase much, but the good thing is that their profit did increase in cannabis, and that's where most of their profit margin is in cannabis, as opposed to their distribution revenue in Germany. But that's more of a long-term European medical cannabis play, to own a distribution company in Germany. Brilliant, right? But in terms of cannabis, they are increasing that revenue. The margin did go down a little bit, but still, that's scaling and filling the demand in Canada. Now, the thing is, they did have a net income loss, but they converted some debt into equity, which when you add that to the negative 120, it puts them to a positive 3.2 million, which gave them a positive net income per share of 1 cent, better than negative. So that was big for them, I think, at least looking like for analysts looking at them. But if we break down the revenue, Aphria, as of right now, they get distribution revenue from CC Pharma in Germany. They get cannabis revenue from in Canada, and then they've got beverage alcohol revenue from Sweetwater, the brewing company that they bought. Now, I listened to a conference call. This is only from 5 days, 881,000. So that's something to look forward to. But the main thing is we can see that at least since last quarter. Now, this is from 3 months ago. They increased distribution revenue by 10 million, so they've at least gotten that, making more money. I don't think the margins are as profitable, but still making more revenue, which is good. But their net revenues in cannabis have increased. And what you want to see in Canada is every single 3 months, you're increasing the amount, not staying the same or even seeing sales go down. Aurora is staying stagnant. Canopy sales are actually going down. Like, they're not growing their market share, which is important, which is mandatory. So again, net revenue, though, did go up by 15%. That's huge. That's that 33%. Oh, no, sorry. The 33% was from year over year, but again, that's big. Two things to point out, though. They sold 6,000 more grams than last year, and they got cost per gram down from 87 cents, or not last year, last quarter. So 6,000 more grams from last quarter, but again, 87 cents down to 79 cents. And long term, the lowest cost producer in any industry will usually always win. So this is why it's very good for Aphria in Canada. And last thing to point out is just the breakdown of converting the debentures into equity, which made them gave them a positive net income for once, or per share for once. But then here I wanted to point out that their cash flow from last quarter, negative 86 million to negative 16 million. And on the conference call, Irwin was confident that they hope to have free cash flow by Q4. So not next quarter, but the following quarter, which would be their fourth quarter fiscal year end. So that's just, again, not phenomenal or anything, but that's good. And that just goes to show that solidifies Aphria's number one in Canada. And Aphria's price target raised by Cantor to reflect merger with Tilray as analyst deems earnings disappointment. So funny enough, despite their, we were disappointed by November quarter reported by Aphria, but we're still raising their price target from $11.75 to $26. So that would account for why Aphria's price jumped from 10 to 15 during the week. But again, why do they see this? It's not even just the performance right now. It's future growth based on all the circumstances. President-elect Biden, VP Harris, the senators flipping the Senate. Then you've got Israel, Mexico, Germany, Netherlands, all these companies that plan to legalize at some point. You've got the UN vote to reschedule medical cannabis. All of these good factors, show that Aphria is in a great spot right now, but this is why they're anticipating more future growth to look into. Like, just think about how much of a valuation tech companies trade at. These cannabis companies don't get treated anything close to. And that's where once they get their fundamentals in order and the laws actually change, that future growth can come into these prices. Now, I wanted to point out Village Farms International. Shout out Anthony Kerwin for mentioning this. But again, I think in Canada, the only two companies worth investing in are Aphria and Village Farms International. Anything else, I won't touch it because, like he said in this article, this analyst did, a lot of the other companies are distressed. We'll get there, but Village Farms International, they're not distressed. They're showing growth every single quarter. And so because of that, they've announced that into agreement with certain institutional investors to sell 10,000 shares. So again, though, this does create more shares. This does dilute their outstanding shares and their market cap, which causes their share price to typically go down. But they raised $135 million, which gives them that much more money at $15.70 a share Canadian or $12.40 a share US on the NASDAQ. So the thing about Village Farms International is they can trade on the NASDAQ because they're a Canadian LP, but if you own VFF under this price, you can feel phenomenal about that because you're in before certain institutional investors even decide like, hey, the Dems flipped the Senate. All the momentum is behind us. Let's get into VFF. And I think it's worth pointing out that, again, VFF was not always a cannabis company. They were a vegetable distribution company with a distribution network between Canada, the US, and Mexico. But as a Canadian-based company, they decided to get in on the cannabis space when Canada legalized. So that's where I think VFF has a great advantage long-term, besides Aphria. And we'll get into some of the other ones. But on the topic of raising money, again, the sentiment has made it easier for these companies, and especially just the overall factors, the reality that Biden and the Democratic Senate did flip, right? So everyone's thinking, okay, this could actually happen. This will happen soon. It's not a matter of if, but when. That being said, Cresco then also sells $125 million worth of stock to 7 institutional investors. Now, keep in mind, Cresco cannot list on the NASDAQ because it's not an LP, so these investors are likely not American. And that's another just interesting point, right? Is until the Safe Banking Act passes, us small fish can get access to these companies even before U.S. institutions start buying millions of shares. And so what Cresco's done is they've raised $125 million at $16 a share. And so again, this is just a metric that like, hey, if you own Cresco before lower than $16, you own shares cheaper than these institutional investors who are happy to put in millions of dollars at this price and still think they're getting a very good deal. And what's fascinating is that the issue price represents a 3.3% discount to the last close of the company's voting shares on January 14th, which means actually after raising money, their share price went up. And that's not common. When you raise money, it typically dilutes and causes it to go down. But get this on top, Cresco Labs to expand into Florida through acquisition of Bluma Wellness. So, whether they raise money to cover some of this, it seems like they have a plan, Cresco, to expand. And what they did was they've purchased this company, Bluma Wellness, for $213 million in all stock in an equity deal. So they're using their shares to buy. Again, this deal would typically, although it will make Cresco more valuable in the future, right now it will dilute shareholder ownership. But of course, why would they want to get into Cresco, or why would they want to get into Florida? We'll take a look. Well, this gives them 15 dispensaries in Florida, one of the most heavily populated states, and their stores rank second highest in per store sales of smokable flower in Florida. So not only will they have a lot more dispensaries, they'll have top locations that sell a lot just based on where they're located. And again, Florida, third most populous state in the U.S., second largest growth of state residents in 2020. People are moving there. So this is big. And again, on top of raising money and buying another company, Stifel, an investment firm, has raised Cresco's price target to $21.50. So it's like these institutional investors could be like, damn, well, I mean, they're going to be happy they got in at $16.50, but even then, they're seeing an increase of like 50% from where they got in, just because, Stifel actually sees, based on everything Cresco's doing, there's reason to believe that they're worth, their shares are worth $21.50 up from where it is now. So I just want to point that out as how like the MSOs are in a very different boat than Canadian LPs. So it's so important to just know the difference, and the context is everything. And on that note, we're going to visit 2 Canadian LPs that are distressed and that need to start making money from the US. One is Hexo, and that is why their Trust CBD USA, which is a Hexo Corp and Molson Coors joint venture product, launches very well sparkling CBD water in the state of Colorado. Why do I think they're in a rush to get this out sooner than later? Not only the sentiment in the US and sales in Colorado hitting $2 billion, we'll get there soon, but again, Hexo is a company that spent a lot of money in Canada and are not making the money that they thought they'd be. Therefore, they need this joint venture to make the money to offset the fact that they're struggling as a company fundamentally. And Canopy, for example, again, in Canada, their beverages failed, their flower sucks, and their brands don't sell. Therefore, they made a deal to buy Acreage Holdings and TerraScend, which are 2 U.S. multi-state operators. Now, this press release is just funny because it's so, like, if you don't know the context, what does this even mean? Canopy Growth announces filing of early warning report regarding TerraScend Corp. All this means is that in this deal to buy a large percentage of TerraScend, or I think it was to buy the company, there's an option in the deal that Canopy can, buy 1,000 more shares for $10.5 million in order to own 7% more of TerraScend, pending upon the occurrence of waiver of amendments to federal laws in the U.S., so pending U.S. legalization. So all this really says is that we, Canopy, want to exercise the option in our deal that says we get to own 0.7% more of TerraScend pending US legalization. Now, why are they doing this? Because obviously they believe that the US is going to legalize within this year, just based on, again, all of the sentiment change and what the reality has become behind us, which is great. But so again, this is Canopy now spending $10.5 million and thinking that by owning more terrorists and in the long run, they're going to make a better return on investment. And again, Canopy needs legalization to happen because fundamentally as a business, even though they have Constellation Brands behind them, Constellation Brands gave them $5 billion in 2018. Canopy spent $4 billion of it and have seen nothing to show for it. So it just goes to show that it's so important to know the differences between LPs and MSOs, and then know the difference between the LPs, especially the ones you're investing in, the ones not. Now, lastly, just to jump into some great more positive sentiment behind us, is Michigan cannabis sales surge in December to reach $985 million in 2020, which is incredible. 510 came from adult use, 474 came from medical. So that's really big. And again, just as these states open more dispensaries, you're going to see more sales. And I just love that US MSOs are really getting into, like, it's medical and recreational from the get-go, whereas in Canada, unfortunately, our medical market has shrunk a tiny amount because you can get it, it's accessible recreationally, right? So anyways, this growth is just, it's fascinating when you consider, the fact that Colorado has hit $2 billion in a single year in total revenue from sales. That's unbelievable. Now, again, this is medical and recreational, but this is in Colorado's sixth year. And considering the fact there's only 5.7 million people in Colorado, this is incredible. So you can scroll down. Obviously, all these links will be in the description, but think about that. California's already hit $2 billion. Colorado's now the second to do it. Earlier this year, Oregon hit $1 billion in sales. Michigan just hit $935 million. Illinois just hit $669 million. New Jersey and Arizona just legalized adult use. So on top of their medical, they're going to have recreational sales coming in starting this year. And just so think, how long is it going to take Michigan, Oregon, Arizona, New Jersey to hit $2 billion? Probably less if they got more population. All this goes to show is that, folks, the writing is on the wall. This is the time before U.S. institutions can even get in to just build a position. Again, not with money you can afford to lose, but just if you're fortunate enough to have cash, this is how you take advantage, by getting into an undervalued opportunity or industry before big money can get in, and literally just holding, buying, forgetting about it. That's the easiest way to hold and to invest successfully long term. Forget the day-to-day trading. It just increases the stress and the risk. And, this is just positive sentiment on top, that we have Ukraine preparing for rehabilitation of cannabis. And it seems like Ukrainians are ready to support legalization to save thousands of people. Because again, hey, when people in whatever country start to speak enough, politicians have to start listening. And as a medicine, cannabis is the best overall one we have on the planet. So that's great. Hopefully we get more stories out of Eastern Europe like this, to just see the European medical industry sort of boom sooner than later. And just a big, to give a shout out, Venture Warrior, for bringing up Akerna to me recently in the comments. But I didn't know about Akerna, and it just goes to show that from the midweek update, I actually covered Grow Generation, which is like the Home Depot of cannabis companies supplying all the growers. So it's just great to see that, this industry is expanding into business intelligence and data as well, because yes, of course, there is opportunity that comes from new industries that we create, right? So it's an enterprise software, Akerna, leading compliance technology provider and developer of the cannabis industry's first seed-to-sale enterprise resource planning. Fascinating that this is going on, and a lot of people don't even know. But I wanted to point out that the top 5 sales days of 2020 all happened to come in the last 3 months. New Year's Eve, 89 million. Green Wednesday, which is 2 days before Black Friday, 87.4 million. Wednesday before Christmas, 87.3. Black Friday, 86 million. And the Friday before Halloween, 85.8 million. Now you can scroll down for the breakdown of sales, gender, and types. But this is just incredible, because these are days. This is, almost 300 million in sales in just 5 days. And folks, if you've waited this far, I want to thank you for watching this video, because I went ahead and did the work, and I looked at Cresco, Curaleaf, Trulieve, Harvest, and Green Thumb. And when they reported all of their earnings in November, they were reporting for July, August, and to the end of September 2020. September 30th, 2020, okay? Now, why is this important? Because we are actually going to see these sales numbers when these US MSOs report their earnings in February. Why do I know that, or why do I think that? Well, again, think about it. Aphria, their last earnings was in October. And now in January, they're releasing their earnings up until November 2020. And so if we look at Cresco, November 18th, 2020, releasing up until September 30th, 2020, that means in their next earnings, which will be in February, for all of these MSOs, they're going to include October, November, and December sales. So it's going to have these top 5 cannabis sales days, which makes me think, or gives me reason to believe, that US MSOs will put out phenomenal earnings. And again, just emphasizing why you want to try to get in, if you can, before legislation starts to happen, before the Safe Banking Act, before the rumors. Because again, I don't see anything stopping this. The momentum is finally behind us going forward as opposed to against us. And I just think this is going to be the next great American industry, just because everything else has been shipped overseas for production. There's nothing left. So America needs this. And folks, I'm just happy enough to share what I know in hopes that you can see what I see and take advantage. So just a reminder again, do not try to trade or try to become a short-term trader. The most successful investors are the ones that can just find an opportunity, trade as less often as possible, and find a good position to just buy and hold over the long run. And just wanted to point that out. But of course, folks, let me know what you think. Do you see any other opportunities that I missed? Is there anything that happened this week that I did not cover? Let me know in the comments and let's start a discussion. And before we go, I just want to say thank you so much for tuning in. If you enjoyed this video, please leave a thumbs up as it really helps out my channel, and subscribe so that you don't miss any new videos. And I hope you enjoyed that, folks. Have a wonderful day, and we'll see you on Wednesday. Have a good one.